16-1, work together. Step 1, they want us to go ahead and identify the accounts that are associated with what will build the income statement. The first account that we know for a fact is going to be used on the income statement is going to be merchandise inventory. It's what we use to find the cost of merchandise sold. All the other assets and liabilities are not utilized, or owner's equity. So all of these are actually not used on the income statement. These are all found on the balance sheet. So we're just going to go ahead and click all the way down. All these payables, all of these are on the balance sheet. The last account that's on the balance sheet should be your dividend. The first account that we actually do incorporate is going to be our sales. So even the income summary is on the balance sheet. Sales is going to be used for operating revenue. And we have sales, sales discount, sales returns and allowances. For the cost of merchandise sold, the other three accounts that we will use will be purchases. Purchases, purchase discounts, and purchase returns and allowances. The remaining of the accounts fall under operating expenses. It's really easy to identify an operating expense because it says the word expense. So all of these are operating expense. The last two, which is your federal income tax expense and income, these are not operating expenses. These are unrelated to normal operations. Now let's go ahead and go to step 2. They want the calculations required to determine gross profit, and they want us to put it in the right order. So the first thing you need to know is your net sales. So this is going to be number 1. Second thing you need to know is your net purchases. This is number 2. You use your net sales and net purchases to calculate your cost of merchandise sold. So that's number 3. And once you know your cost of merchandise sold, you're going to use that to figure out your gross profit. So now we know the 4 formulas that we need to do. Let's actually break down each formula individually. Cost of merchandise sold, the first thing that you need to know is your beginning inventory. So this is your inventory on January 1st. You're going to add your net purchases, and that's going to give you the total cost of merchandise available for sale. Once we have the total cost of merchandise available for sale, we're going to subtract our ending inventory. Now we have the cost of merchandise sold. To figure out your gross profit, that's even easier. You're going to take your net sales and you're going to subtract the cost of merchandise sold. This is going to give you your profit. Now we've got our profit. The last two, net purchases and net sales, are calculated identically. You have your purchases and you're going to take out your discounts and your returns. Same thing with your sales. You have your sales and you take out your discounts and your returns. Step 3, they want us to determine the actual gross profit. In order to do that, we're going to go ahead and we're going to actually start filling in our income statement. The first thing that you're going to have to do is actually label the report. So we have to have the name of the company, so Superior Corporation. This is going to be an income statement. And this 4-year ended December 31st, 20 dash. We're going to go ahead and fill in the account titles first, and then we'll get the numbers. Step 1 is the operating revenue. To calculate the operating revenue, you're going to take your sales and you're going to less the sales discount, and this is going to give you your net sales. Let's put in the numbers. Our total sales was $505,897.40. Our discounts were $1,318.55. Our sales and returns and allowances was $3,153.26. You're going to add the discounts and the returns and allowances, and that's going to give you $4,471.81. And then we're going to subtract this value from our sales, and that's going to give us our net sales. So our total net sales is $5,001,425.59. We're going to do next, and this is our cost of merchandise sold. Remember, the beginning inventory is January 1st, 20 of the current year. And we're going to figure out our purchases and subtract our discounts, so less our discounts and our returns and allowances, and this will give us our net purchases. So let's calculate our net purchases. First, our inventory. We started out on January 1st with $86,789.15. Throughout the year, we purchased an additional $203,881.01 of stuff. For some reason, we did have some purchase discounts, so we got a little break with $737.71. And there was some stuff that wasn't up to par that we returned. So we returned about $1,196.01. So to adjust how much we actually bought, we're going to take that $203,881.01 and we're going to subtract $1933.72. So our net purchases is going to be $2,001,947.29. We're going to use the inventory and the net purchases to figure out the total cost of merchandise, and merchandise is abbreviated, available for sale. And that's going to be this 86,000 combined with this 201. So we end up with $288,736.44. We're going to subtract our merchandise inventory. And this is at the end of the year. So we're going to subtract for December 31st, 20 of the current year. And our inventory was $81,017.26. When I subtract these values, what I'm going to end up with is the cost of merchandise sold. And again, that's these two values subtracted. And that's going to be $207,719.18. My net sales, and I'm going to subtract my cost of merchandise sold, and that's going to give me my gross profit. $293,706.41. In step 4, they want us to finish the income statement. What we created in step 3 was the first part of the income statement. This tells us how much we made. Step 2, or really step 4, tells us how much we spent. What we need to incorporate is our operating expenses. I'm going to go ahead and put these values in rather quickly, and then we're going to total our operating expenses, which is going to be down here. When we total this up, our total operating expenses is $201,144.12. Now we do have to incorporate income from operations, so that's going to be our next one. And our income that came from operations was $92,562.29. We do have other revenue, because remember, we do get money from that interest income, and the money that we acquired from interest income was $466.20. We're going to figure out our net income before federal income taxes. So net income before federal income, which is going to be that 92,000 plus the 466. So we're just adding the interest. That's going to give us $93,028.49. Now we actually have to subtract out what we paid for income taxes. In this year we paid $19,879.69. We subtract the taxes that we paid and we get our net income after federal income tax. I subtract out my tax and my final net income is $73,148.80. All that's left for us to do is the vertical analysis. What the vertical analysis does is pretty much allows us to calculate the percentages. Everything is based on a percent of net sales. If you forget that metric, it's at the top. So our net sales is going to be our 100%. All the other percentages that we're calculating, we're taking the value given and dividing by the net sales. When I take my cost of merchandise sold and divide it by my net sales, my percentage is 41.4. When I do the same with the gross profit, I get 58.6. I scroll down, we're going to do the same thing with these last values. My total operating costs is going to give me 40.1. My income from operations is going to give me 18.5. My interest is going to be 0.1. The net income before the taxes is 18.6. The taxes themselves is 4. And at the end of the day, my net income after federal income taxes is 14.6%. So when they ask us from our total sales, how much income did we make? We made 14.6%, which is just under 15. A lot of steps in chapter 16, especially in this lesson, but just be careful and take your time.